Welcome back, and today we are going to be talking about one of those hard finance topics that you guys may have heard before or may not have heard before. And this is paying off your mortgage early, right? But we're not just going to be talking about paying off your mortgage early. We're going to be talking about should you pay off your mortgage early and some of the things that are going to occur in that process and some of the sacrifices that could have to occur in that process. So, as you guys know, I will always say at the beginning of the video, please like this video and please share this video with others. And thank you all for watching. Let's get to it. So, should you pay off your mortgage early? Personally, I believe it depends on you as a person and how you're going to be able to capitalize on paying off your mortgage. And you have to weigh out the opportunity costs for you. Now, there are benefits to paying off your mortgage early, but there are also cons to paying off your mortgage early. So it really depends on you and what your financial goals are. Now, from a personal perspective, I'm just going to be honest. Mortgages are long-term secured loans. These are typically going to last 30 years, right? So in the situation or in the instance that you are not planning on renting this house out and using it as some type of investment to make money off of, and you're not running some other business where you need the cash flow, it's typically going to be in your best interest to go ahead and pay off the mortgage early. And here's why. For one, you're going to have less interest to pay on the loan. When you shorten a loan term up and you pay it off faster, you typically are going to have to pay less interest over the term of the loan. The next thing, you're going to be building equity, right? So what does that mean? Building equity is building up how much of your home you actually own versus the value of your home. So once you get to a certain amount of equity in your home, you can actually go and pull that equity out and use those liquid funds to invest in other things. So you can always go back and borrow this money back out of the house. You know, you ever heard of the term house money? You can literally do this now by being able to pull equity out of your home with a home equity loan or a HELOC or something of that nature. Now, one of the other and greater and more obvious things is you'll own your property in full. I mean, who wouldn't want to actually have the deed to their house? All right. As someone who is a property owner, I can tell you it is an amazing feeling when you go down and you file your deed at the tax collector and you know that you own your property in full. And as long as you pay your taxes, no one can come and take it from you. Now, another thing is, of course, it's hard to get more than one mortgage loan for the average person because typically your income is not going to permit you being able to get multiple mortgage loans. So this is a method that's going to allow you to acquire more properties. All right, by having these funds available to you and having, not having another mortgage loan on your credit report, it makes it a lot easier to be able to go out and purchase another property. All right, then of course, like we talked about it, and this works in a positive and a negative way. You're either going to lose cash flow on the back end or on the front end, and especially for those people who are willing to put up that extra money on the front end to get that equity and make that extra money on the back end. This can increase your cash flow in the long run because you will not be paying a mortgage payment. So once you pay off that mortgage and you've been used to paying $1,000 a month per se, right? You done paying that money off. You own this house in full now. Now you have $1,000 a month. That's your extra money. You can go and take it and invest it somewhere. You can save it. You can purchase an insurance policy. You can have fun with it. You can do whatever you want to with it. Now you own your home in full. And lastly, by owning your home in full is going to give you an extra sense of peace of mind. Okay. When you don't have to worry about getting up to go to work every day, because you only have to worry about paying your utilities, food, and small, other bills, and, your taxes. You don't have to freak out if you lose your job or other things of that nature, because you have so much time to recuperate and bounce back compared to the next person who does not have those same opportunities to have that security of knowing that their home is paid for in full. So as always, thank you all for watching. Thank you all for tuning in. Don't forget to like and share these videos out on all platforms with everyone that you know, and we'll see you all in the next video.